Alright, welcome back. You're watching First Trades live on ET. My next guest on the show is a true believer of the power of compounding, and he's always maintained that if you buy a good quality franchise in a tough business environment, the good quality franchise will always differentiate. Bharat Shah, Chief Executive Officer and Managing Partner of ASK Investment Manager, now joins us live. Bharat, good to have you back on ET now. Thank you for joining us. First, my compliments, and then I'll ask my question. My compliments because last time when we interacted with you on this forum, you had advised our viewers to cut the global noise, buy good quality businesses, stick to names like HDFC Bank, Asian Paints and Bajaj Auto, and then reap the benefits. Those stocks are at a multi-year high. That was the compliment. My question is, for those who ignored your advice last time, what should they do now?
Well, I think the principles of investment remain unchanged. We try to tweak it time to time to suit the situations and try to see whether there are differentiated ways of doing the same thing. Honestly, my opinion is that while people would say there are various ways to reach Makkah, but in investing there are relatively very limited ways of doing the same. And I think the basic principles don't really change, and more we attempt to try to tweak it based on the situation. Sometimes they do work. It's not as if when we try to tweak things in very bullish markets, things can work out differently and can give different rewards. But in general, replicating long-term success requires discipline to stick to quality, to look for compounding, to look for high quality management, high quality businesses, superior return on capital employed, predictable, sustainable growth, and reasonable valuation, not necessarily mouth-wateringly cheap valuation. So long as we stick to that, that does magic in every situation, provided we pick the ideas right and we stay with the course.
Bharat, hi, morning. Let's chat about individual stocks. And you've got a view on Opto Circuits. The stock has lost almost 12% in last just 2 trading sessions. What's the view on this one?
Well, I typically would not like to comment on individual businesses and individual ideas because in the forum, public forum, it is always important to stick to talking to the broader principles. But the same ideas and same principle would apply to the stock that you named or any other stock. If there is a quality franchise, if it is sustainable, if it is superior return on capital employed, if it is going to do it in a consistent manner and things are fair, then it will reflect in the price.
Bharat, but are good quality companies currently not attractively priced? HUL is a great franchise, Asian Paints is a great franchise, Bajaj Auto is a great franchise, but look at the P multiples. Price to book for HDFC Bank is something like 4 times now.
Voice nahi aa raha hai.
Bharat, is my voice reaching you? Okay, let's look at some good. Bharat, is my voice reaching you?
Yeah.
Okay.
Yeah,
Bharat,
yeah.
My follow-up question is that what about valuations? Are good quality businesses in India still attractively priced? Because if I look at the P multiple for an HUL or the price to book of HDFC Bank, they are wildly expensive.
Well, again, Nikunj, I will prefer not to comment on any individual stocks, whether they are cheap or expensive, and what one should do about it. But let us not get carried away by any specific examples of things having worked or not worked, or whether they are cheap or expensive. The idea for looking at mouth-watering cheapness in investing is a flawed idea because that's not a general situation. Unless markets in a very depressed situation, that in general you get stocks very cheap, or some specific stock is due to certain specific reasons is available much cheaper than what it deserves. Barring these, you don't get extremely cheap valuations. What you have to hunt for is a reasonable valuation. So if, I think in long term, the things that have added value have clearly stood out to tests. One, that the quality of business is high. In other words, it enjoys a consistently superior or outstandingly superior return on capital employed. And second, that it enjoys a growth. I think the return on capital employed provides a sail to a ship. In other words, it provides it a support, and the growth provides the wind to those sails to move it ahead. And you need both. So long as you have these and you buy it at a reasonable price, not necessarily very cheap price, you will do okay. I mean, you look at some of the stocks that you mentioned. Asian Paints, for example, over a 10-year period is compounded at close to 32%. I mean, and even on a longer term record, those are the kind of numbers. So there are plenty of these quality businesses at every stage you will find, and you will think that they become very expensive. But we forget that when a business enjoys a very sustainable, long-term, consistent kind of a franchise with a very predictable, decently predictable earnings, then in the eyes of the market, for every rupee of earnings growth, the value that is ascribed is more than proportionate. So in other words, to get a good compounding, you don't have to do exceptionally high growth. You need to have reasonable growth to have above average compounding. In other words, you don't have to drive car very fast to reach the destination well, because that is prone to accidents and mishaps. But if you drive it consistently, properly, and without violating anything, then that actually attains the journey much, much better. That's what I would think works in the long-term investing. So many of the ideas at various stages, you go back in the past, and for many of these high-quality businesses, take a 1-year forward earnings and look at their valuation on that day, and you will find invariably they are available at a valuation at which you will be deterred. But if you stay the course, then you find that they really create outstanding growth.
Right. So Bharat, where to your mind in the current environment the opportunity is large? Because over the years I've known you, you've always insisted on the word opportunity. Give us an example of a sector, group, or a stock or a business where opportunity is large, return ratios are strong, and valuations are also reasonable.
Well, the businesses remain the same, what we have discussed many times in the past. I think the consumption businesses continue to be very, very large opportunity given the large base of the country, and given the fact that there is a rising income that naturally translates into superior consumption opportunity. Time to time we keep getting concerned that these businesses have become unduly expensive. Some may have been, but overall that opportunity remains pretty large to my mind. In pharmaceutical, we have discussed that there is a superb global opportunity, there is a local opportunity, and both opportunities are there to be tapped for businesses with the right kind of a business models. So many of these companies have shown consistently very strong compounding, and again you have to hunt within that high quality businesses and not the mediocre ones, because in each sector, even within a good sector, there are plenty of mediocre businesses and there are plenty of high quality businesses. So one will have to differentiate between the two and pick and choose the ones. Banking of course affords a long-term outstanding opportunity of superb compounding. Even automobile, there are many high quality franchises, both in automobiles, automobile ancillaries, even in capital goods. Right now, though many of them are weathering the difficulties of the slow order books and the environment challenges, but high quality capital goods businesses bought at a fair price in the context of today's situation will work well as the tide turns in the favor. So there are plenty of other opportunities as well where these are abounding. I would be constrained to talk about any individual names, but it is not very hard to guess what kind of businesses will meet with this description. So there are plenty of businesses, I would still say, even in today's environment. While earlier also I had discussed and mentioned that we are witnessing an interesting situation where the polarization has become far higher than ever before, and that is the truth. And if we have to critically examine our own investments and portfolios, and if there are any mistakes, and if there are any investments which are not aligned to those principles, then I would suggest, and I would think more for myself, that we have to rectify them. But when we have stick to discipline of buying a high quality franchise which gives a decent compounding, decent growth compounding, not exceptional growth compounding, it still is a winning formula to get pretty strong long-term returns.
It's so good to have you on the show. Appreciate you taking the time out and joining in today.